Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to today's pre-market prep. Spencer Israel here with who? Joel Elconin. What's up, Joel? Dennis is out today. Dennis has to go figure out where he's gonna live or blow up his house or something to do with his house. That's all I really know. So Dennis is out today. But that means it's time for a day of Joel ranting. Joel, good morning. Welcome to the show. Everyone, welcome to the show. We got a lot to talk about. We've got GameStop earnings. Of course, we're going to talk about that. What else would we talk about? We have a CPI number at 8:30. They are saying it could be a hot one. We had a hot one last month, so maybe transitory inflation, maybe not. I don't know. We'll find out at 8:30. In the meantime, we have our first guest at 8:15. Mark Chaikin joins us every other Thursday at 8:15 to give us his thoughts on the market. Also, at 9, I'll be joined by the Einstein of Wall Street himself, Peter Tuchman, who will join us to talk about the market and give us his thoughts as well. So give us a like, hit subscribe, show us some love. Joel, good morning. How are you doing? But more importantly, how are the markets doing?
Good morning, Spencer. Good morning, traders and investors. I'm giving you the June contract here, and I'm going to give you the June contract for tomorrow and Friday. The official front month contract is now the September, but I'm sticking with my June numbers for the remainder of the week. We're down a stick. We were up 7. We were down 7. And here we are right in the middle. Need to take unchanged. We could talk about the technical formation when Spencer comes on here. Man, you talk about a hard top in the market. You have it right now. 22.80 in the SPY, and this is called 37, 42, 37, 38 in the SPOOs. Crude still hanging in the $70 handle. That's up 7 cents at 70.03. Gold losing the battle for 1900. That's down $20 at 1875.20. Silver, that's in the red by 32 cents at 27.68. Bitcoin 2-day rally off the El Salvador news, that's up $1,400 at 37,770. And Ethereum, that's just up just a tad here. Let's call it unch at 25.75. All right, Spencer.
I'm here.
Put a 1 if you're happy that Daz is taking a day off. He needed a day off. He needs 2 days off. That guy he works his ASS off, and I'm just happy for him to be taking a day off and get a little rest and relaxation in.
Well, I don't know if that's what he's doing. At least what he told me,
it's his birthday tomorrow too.
Right.
Yeah, so he wanted to be off on his birthday.
Well, he told me he's questionable for tomorrow, or maybe doubtful, but he's not out. He's not out.
He's not out? I thought he was out.
He told me it's doubtful. So he's maybe he downgraded himself when he talked to you, but when he talked to me, he said doubtful for Friday, but out for Thursday. So we're gonna miss his birthday, but I think he's got to figure out his house. So I don't know if today's a relaxation day for him.
All right. So what do you want to talk about first? Well, first let's just talk about what I said at the top, folks.
Okay.
And have I ever used the term "made the journal" before? I was in the Wall Street Journal yesterday.
It's been a while since
we've
used that term. It's been a couple years probably.
And when you make the journal, and this is kind of old school, I don't know. Does the journal even print stuff anymore? Do they even print the tables? They do. The high and the low?
I definitely haven't seen a paper in over a year, but last time I saw one, there was tables in there. So
okay. All right. Well, I bought the top in the S&Ps. I thought there was a breakout. It was one of these bings, used a tight stop, got filled, boom, I'm out. So major resistance up there, 18.5. That's where we're trading. We'll have to look where that September number is. But man, major resistance up there going into an expiration. We'll just see what happens, right? We will see what happens going into it. But oh man, 4 5s, those were the tops back in May. You got going back to last Friday, those are the tops. So we've backed off that area. But man, I can't put enough stars across there to mention the resistance. So that's what we have in the S&Ps, even though no one cares about them.
All right, let's talk about GameStop. I think I have a pretty good feel for this, or feel for walking this one down the middle. I can understand, again, I have no skin in the game here, but I can understand how you can interpret that report as great or as horrible. So let me give you the numbers here from my handy-dandy Benzinga Pro, and Joel will bring up the charts. GameStop had earnings. Whoops, there we go. Earnings last night, obviously. Earnings per share, they lost 45 cents per share, which was way less than expected. They were expected to lose 83 cents per share. Sales came in higher, $1.28 billion versus a $1.16 billion estimate. They also said, we are going to file paperwork to do another at-the-market offering for up to 5 million shares. They named a new CEO, Matt Furlong from Amazon. They named a new CFO, Mike Recupero. And those are the headlines.
Okay, you ready for my rant?
Yeah. Although maybe I should start and say why I think it was a good or bad, or maybe you just go. You go and I'll react.
Who cares about the earnings report?
Okay.
Who cares about the earnings report from this company or any other company moving forward? It has nothing to do with the stock price. So I think we should just take earnings off Benzinga Pro. I don't think we should talk about earnings anymore. I don't think we need any Wall Street analyst anymore. I think earnings, PE, all that is irrelevant information. All right. And I think that we should just get rid of earnings, and not companies shouldn't even report earnings anymore. They have nothing to do with the fundamentals of nothing to do with the price action of the company.
But if they don't report earnings, how are we going to get a parade of analysts saying congratulations on the good quarter? Congratulations on the good quarter.
Get rid of the analysts.
Oh, okay.
Yeah. It's irrelevant. It just doesn't make. And what we've learned this year, or in part of last year, is that earnings don't mean anything. They don't. Stocks don't trade based on fundamentals. Stocks don't trade based on earnings. So, that's it. That's the market environment in. So you can trade technicals, right? The street, bought it up into the report, sold it off. I'll just say, hey, we're down $21. If they like the information, they're going to take it green. Take it back over, the close, take it back up to yesterday's high, and take out that 350 number. If they don't like it, they'll take out this pre-market low at 261.61, and then you guys can figure out your own daily levels after that. But I just don't think that, I just don't think it's relevant information to base trading on fundamentals or earnings.
For the record, I read the headline numbers, the EPS and the revenue more so out of habit, but in this case, I do agree. In this case, those numbers are all but meaningless. Here's like my bullish reaction to yesterday's report. Okay, they got a new CEO. That was a big question mark, right? We know Ryan Cohen was announced as a chairman. Now they have a new CEO. It's this guy who was at Amazon Australia. That's a big question mark that is gone now. A big unknown that is out the window. They have a CEO. They have a plan. They're doing the plan. The plan is starting, right? The transformation of the company from brick and mortar to whatever it's going to be, some sort of e-commerce thing. It's happening. It has begun. Okay, they got the old CEO out, new guy in. Numbers all but meaningless, really. The revenue grew for the first time in a few years, so I guess that's something. But that's my bullish take on the report. And also, maybe raising more money. Short-term bearish, but long-term bullish because they're paying down their debt, right? So they're cleaning up their balance sheet. So that's my bullish reaction. Bearish reaction is. Okay, they're doing maybe another offering, so more dilution. They didn't even mention e-commerce on the.
What about the NFT thing?
Oh, they didn't. Okay, that's a good point too. So no mention of e-commerce or NFTs in either the press release or in the conference call, which again they took no questions for, and the whole thing lasted like 15 minutes, if that. And they're like, we're in, we're out. We're basically they just read, the CEO just read the press release, and like that was it, and no questions. So no mentions of e-commerce, which if you remember last quarter, that was like the focus of the report, of the press release, of the call. It was e-commerce, e-commerce, e-commerce. Look at us, look at us, look at us. Okay, no mention of that yesterday, not one. Why? What could be? What do they have to hide? I guess is my question. Why couldn't they even mention like the biggest growth driver of their company right now? So that's a red flag. No mention of the NFT thing also maybe red flag. And they're not giving guidance still, which like I guess I can understand a little bit. But a lot of other companies are doing it, so I don't know. So that's my bullish and bearish reaction to this report. Big question mark is out the window now. We got our CEO, we got our plan, the plan's happening. On the other hand, they didn't really tell us anything yesterday. They told us basically nothing. We learned nothing about the company besides the new CEO, and maybe we're going to raise some more money and issue more stock. So I don't know what to make of this. The market says the market doesn't like it for now, but I don't know what to make of this.
It's down $21, Spencer. That's what you make of it. Is this thing trading? I don't even see the. Is this? Am I still? I see other things trading. This thing is awful quiet. No one knows what to do. But anyways, if it's a good report, they're going to get it unchanged, take it into the 300 handle. Like I said, if not, it looks like it's bid a little bit here, right around 280. I said the same thing with the pre-market low. Take out the pre-market low, boom. Got some more on the downside. I'll give one next daily low that comes in. If you take out the 81, let's just call it 250. Because there was a low at 45.77 and a low at 55.20. So that's how you got to trade it today. I'm sure a lot of people would like to see that mark at 82.56. Or excuse me, not 82.56, 302.56.
So there's a lot of people in the chat that are saying this company has no idea what they're doing, and there's others saying that you guys just don't get it. So clearly a lot of question marks. Like I said, I think I have a pretty good feel for walking this line here, because I can see why you would think of that report as good if you're like in this thing from like 50 or 100 or whatever. I could see why you look. We all interpret things how we want to interpret them, right? If you're already in the thing and you're already up huge and you want to interpret it in a positive way, I could see what you could tell yourself. And on the other hand, if you're not, I could see how you look at this report and say this was a complete joke, because they didn't tell us anything. They're not giving really any information, no forward-looking numbers, no e-commerce numbers at all, when that's like the plan, right, is to become an e-commerce company. So what are you doing over there? So I can understand that as well. So I'm trying to be Switzerland. People are saying things about how do they justify the valuation. That's not, I think, the point here, right, is like, you can't justify the valuation by any metric, any ratio. That's not the point. But let's just see how like the crowd reacts today. Let's just see how the crowd reacts. You're right, Joel.
They're reacting. They're giving you the price. It's down. It's down, Spencer. That's how the crowd's reacting.
Yeah,
that's. I mean, it's had a huge run into the report. Street got a little nervous yesterday. They sold off into it. Yeah, that's It's just not the GameStop show, Spencer.
Okay, fine. We're gonna move on. Actually,
I'm gonna tell Dennis on you that all you want to do is talk about GameStop.
No, I don't. You know what? And so here's what we'll do. Let's bring Mark Chaikin on from Chaikin Analytics, and let's ask Mark what he thinks about this CPI number that we're going to get in 15 minutes. About Mark. Good morning.
Good morning, Spencer. I thought you were going to ask me about GameStop.
No. I'm not allowed to do that, apparently. I'm not allowed to ask.
Oh, yeah. Obsessing over one stock is never good.
So let's talk CPI. They're saying it could be a hot number. Last month, of course, number came in well above estimates. This time around, they're looking for a year-over-year inflation rate of 4.7%, which would be the biggest increase since 2008. What are you looking for here as far as that or market reaction?
Bond market doesn't care. That's pretty much telling you everything you need to know.
Okay.
If it
Yeah,
comes
that's
in,
interesting. That's interesting.
yeah,
Go
I
ahead,
mean,
Mark, on that.
if it's no, that's fine. If the 10-year was, spiking up in terms of yield to 165, then you have a problem. But there is no problem here because
There is a rally, though. There is a rally.
Is there?
There is I mean, there's a little bit. I'm looking at whether you're looking at the TLT or you're looking at the 30-year bond. It's still pretty close to the low, but if you're looking on monthly candles, this is the third green candle in a row. So it's nowhere near a breakout of a major retracement, but transitory. This is all transitory, Mark. You know that there's really not inflation out there.
The market wants to believe that. The PPI is the more important index, and that's even hotter than the CPI. But right now, the market doesn't care. Although when you look at the S&P 500, it's banging up against 4250 and finding it difficult to break through. But what I find more interesting is small caps. Now, small caps typically do well in a period of rising interest rates. And you've got small caps breaking out, or at least the IWM is trying to break out. And I think that's the interesting tell here in the market, that the big cap stocks, other than tech, may be running into a wall, but small caps are really doing well.
I want to ask you, well, we could touch on that in a second, but I know you're technical. I'm technical. I'm a little too technical, but man, all these tops in the same area, whether it's the SPY or the S&P. I mean, going into a quad witch, going back at all your years on Wall Street. I mean, I think we had two highs up there in May, and then every day this week so far we've made a high. And it doesn't look like we're going to get up there today. We're rolling over the futures contract. We're going into a quad witch. We've talked to you about expirations and stuff. Is there any big gamma unwind we need to look at? And just give us your historical, it's just a top. And I guess we get a formation like that, the trend is up. Are we going to blow the doors off this 42.38 for me and go to 4,300? What's your technical setup?
The setup isn't good right now, and I don't think there's a big gamma unwind in this this particular expiration. There is in individual stocks like Tesla and so forth, but not in the indices based on the people who monitor it. I don't have that data, but there are some really smart people who do. I think we're basically looking at a market that is tired in terms of the leaders that have gotten us here, but there's a lot of under the surface robustness in the economy. I think the two most important earnings reports that came out are Signet and Restoration Hardware, RH. The consumer is still flush and in a position to drive prices higher. And I like the fact that they're out there buying, and people are out. I mean, if you go into a big city right now, I'm sure you guys have seen the pictures. It's like the old days. It's business as usual, and people are getting on airplanes, going out to restaurants. So I think the economy is in great shape. Is it overheating? I don't think so. Is inflation transitory? I don't have a clue. But I think you've still got to like the market. And will we get a 5 to 10% pullback?
No, we never do.
No, especially with July second quarter earnings coming up, the market is going to be ever hopeful. So I think we'll see some sort of softness into a late June low, but you got to like the market here and just look for buying opportunities.
Wow, here's a great statistic. 10 straight days where the S&P 500 closed within 1% of its all-time highs, but didn't close in an all-time high. That happened 3 times in the last 50 years. I wonder what it did the other 3 times. I bet you it blew the doors off. We're on the line with Mark Chaikin of Chaikin Analytics. The thing that I was thinking about this going in the report, like the pent up demand for people getting married, right? Buying those engagement rings, not doing it during the pandemic. So good report out of them. just talking financials have been on a run, showing a little bit of weakness, not much over the last couple of days. So if this is just transitory inflation, we're not going to have much. Is this bank run overdone here? And maybe we've seen a short-term top of some of these financials.
Well, you have. I actually think I'd be looking for a buying opportunity in the regional banks. If you look at the KRE, the regional bank ETF, you were down about 1.5% yesterday. I think it's looking ahead to the inflation number. But I think that the economy is doing really well. The problem with the banks is that people aren't borrowing because they're so liquid, and credit card debt is getting paid off at a very high rate. So you've got a situation where you've got a strong economy, and if there is inflation, then you want to be buying the banks. If there isn't, they probably had their run.
And not to mention, we are about to the overdraft fees about to go the way of the trading commission, right? It's a race to the bottom now. Ally got rid of their overdraft fees, right? So now it's just a race. Now it's only a matter of time before the other banks do the same.
This is a big contributor to the bottom line. Yeah. I don't think people realize that. It's sort of like the stock loan income for brokerage firms.
Yeah. And on that Signet note, I want to mention that this is the second quarter in a row that Signet has raised their fiscal year sales guidance for the fiscal year. That's huge. 2 quarters in a row they've raised guidance.
Pent up demand, as Joel said. Very
those old beat up couches. No stock split out of them, huh? Unbelievable. I mean, look at that, up 670. You still got some room in this one, but for other reasons, not being short any of these stocks, I thought, the potential stock split in this one that didn't come up. I just want to talk to you quickly. I mean, we kind of been poo-pooing the move in crude. It's really helped the energy stocks. I mean, crude's come back a heck of a lot more, on a relative basis than some of these issues have. Is it time to ring the register here, or just stick with the trend moving higher? ExxonMobil, I know Mr. Buffett is enjoying the ride in Chevron. What's your outlook on the energy sector?
I like the energy sector. It's the one sector that hasn't gotten back to the old highs. So it's been lagging the market on a 10-year basis. We sort of know why, because fossil fuels are not fashionable and not profitable. Even with crude at this level, you've got so many energy stocks in the shale and natural gas, which is not really doing that well. But I think you got to like energy here. I mean, if you want to play the market and you take a longer term view, there's more to go, I think, in the energy sector.
And let's just talk gold here. Gold and silver. I mean, gold top of the trading range here at 1,900. I mean, Bitcoin's had a rally. Just a trading range here. Does gold have any potential to clear 1,900 and get back up to 2K?
It does.
Okay.
It does as a substitute for Bitcoin. I think if you're thinking that Bitcoin was your way to hedge whatever you hedge when you get into defensive positions like that, and I'm not sure what people are hedging, but gold has a lot more luster right now than Bitcoin, given the fact that Bitcoin's down almost 50% or more than 50% from the highs.
All right, people who complain, and there are people who complain that all we talk about is AMC and GameStop and what's being talked about on social media. Remember this segment, folks. All we've done is talk CPI, energy, banks, oil, right? I mean, come on. You can't get any more opposite than that.
So, there are two markets here. You've got the real stock market where you're betting against everybody else, the institutions, the public insiders, and then you've got the gaming token market. I mean, you can't really speak of them in the same segment and keep your sanity. These are just gaming tokens, and more power to people who are day trading them. Can you imagine if they were paying either a tiny little transfer tax or commissions? It would be game over. And I doubt that you're going to see commissions come back, but someone could decide to put a little bit of a transaction tax, and that would end the game overnight.
I mean, we don't even, us baby boomers, I mean, we're kind of boring. We talk about, stuff that the market's moved on for the last couple 100 years. But I mean, the regulatory front, I mean, where do we have a regulatory body? Are they doing anything? You think they're lying in the weeds here, or they're just got, their head up there, what?
Gary Gensler is going to make himself heard. He did yesterday, and if you look back at what he did at the Commodity Futures Trading Commission, this guy's the real deal. This is not just a figurehead there. But I don't know what you can do to stop people from day trading.
Nothing.
They did this in '99 and 2000, and short of change in margin regulations, change in brokerage rules, as long as you have the cash in your account to day trade, they're going to let you do it.
I mean, there's nothing wrong with it. It just, when the speculation gets out of hand, then that's when there's nothing wrong with it in principle, right? But it's just when the speculation gets out of hand and when it starts affecting the overall market, then people start to get a little fussy and get angry.
Well, it's affecting the options market. I'm sure you've talked about that, where you've got sort of an inversion of the normal relationship between put premiums and call premiums, and you've got people buying out of the money, way out of the money calls on things like AMC and GameStop, so that they can be short a closer in option because brokerage regulations aren't allowing them to be naked short. Or, so a lot of the prime brokers and the hedge funds won't allow them to be naked short. So they'll go out and buy the 150 AMC option that expires in 2 weeks or 3 weeks, because at least then they're hedged against unlimited quote unquote risk. So
that's an interesting point. That's an interesting point. But we don't want to go too deep in the weeds on that, though. I just wanted to ask you about two stocks that you called pretty correctly here over the last year or so. And have they turned? UPS, big move up, consolidated. I was waiting forever for that to take out 210. They do it on the investor day. I mean, if people are going back to the stores, if people are doing their own shopping, is this a short-term top or the top for UPS and FedEx?
Well, I don't think it's a top, but I think you have to look under the hood a bit. You've got rising energy costs and you've got rising labor costs. And unless they can flow that through to the consumer, to the shipper, basically, the profit margin squeeze is a reality or potential reality. I think those two factors, and that sort of feeds into the inflation scenario, those two factors are a limiting influence on these shippers. And it's very competitive out there now. So I don't know that there's a lot of room for price increases.
All right. Do we got a snoozer here? Oh, no, we got 2 minutes to the CPI. I don't know. The market really, like you said, Mark, the PPI has been the more important number. Really haven't been moving off much except the unemployment number, and they've been good lately. So, Mark, if you want to sit through us through the CPI number, we can do that. In the meantime, I just want to talk U.S. autos here for a second. GM and Ford. GM bunching up here at 64. Kind of reminds me of the S&P there. Big level there. Ford, just one of the biggest moves it's had in years. What's your outlook? Finally get into EVs. What's your outlook for the U.S. automakers?
Love them. I love the autos, and I think these stocks represent a competitive threat to Tesla.
Coming up, jobs claims
real fast, guys.
CPI for May.
That was me. I just turned on our Benzinger Pro Squawk.
Nice.
Charles is gonna. I've never done this before, but Charles is gonna squawk. He does as always, but this is just for Benzinger Pro subs. I'm gonna give you all a peek behind the curtain, and Charles is gonna squawk CPI as it comes out. He'll do it better than I do, better than I will. So we're just gonna let Charles.
CPI.
There we go.
Coming in at plus 0.6% versus plus 0.4%. Core CPI plus 0.7% versus plus 4.4% expected. Jobless claims coming in at 376,000 versus 370,000 expected. Continuing claims 3.499 million versus 3.6 million expected. S&P futures getting a flash drop to 42,850 before bouncing.
A dip and a rip. A dip and a rip, Mark. Did you see the reaction? So, Spencer, recap that we came in with a hot number there, huh?
Yep. Again, so just to recap that, we were looking for CPI of 4.7%. That would be year over year CPI, and what we actually got was 5%. So we came in hotter than the hot estimate. Last month was also hot. Last month came in higher as well. So that's 2 months in a row we came in hotter than the estimate on CPI year over year. Month over month, also hotter than the estimate. Core CPI, which is just CPI, but without food and energy, also came in above the estimate. So everything came in above the estimate.
Yeah. This market's not going to reverse to the upside, in my view. I'd let it find a level here.
I mean, you're talking about for today, or you're talking about
today? Just today. You are heading into an expiration, so you're looking at the futures taking a pretty big hit here.
Yeah. Yep. You still haven't taken out the low from I believe what's today? Thursday, the low from Tuesday. And
right.
Yep, the low from Tuesday, 0575. We got a 07 low. Talking the June here. We got the rollover on the SEP. You also have the rollover, a little bit of a factor in the liquidity here in those markets. That's why probably saw a little bit more volatility, but right now 0575, Tuesday's low, your weekly low right in that area as well. So unless that shakes, I don't know. Support is support until it's broken. Coming back on the upside, I saw after that initial dip, we did almost go green for a second there, and so a pop. We'll see what happens. Now we know why the people were selling the hell out everything, every bid in sight in the 4230 handle. They're looking for a little dip here, and they got it.
All right, guys.
Yeah.
Thanks,
Enjoy.
Mark.
Thanks a lot for hanging out with us,
It's
Mark.
been fun.
All right.
You're
Mark Chaikin is the founder of Chaikin Analytics, joins us every other Thursday to give us his thoughts on the market. So, wow. Okay. 2 months in a row, big time numbers on CPI. Again, not a total surprise if you are out there in the world and you see prices going up. Not that I can tell you what's in the CPI basket. I can't. I confess. But anyway, inflation, we know it's here. The question is, how long does it stay? Some people say it's here to stay. Others at the Fed say not so fast. This is certainly an argument against the transitory argument. So this data point here. So again, higher inflation than expected, and the expectation itself was already pretty high. So that is the highest number, the highest year-over-year increase since 2008. Wow.
I just want to talk to TLT here, inversely correlated with interest rates. It's down a little bit in the long-term chart, looks pretty ugly too. I mean, also if you're looking at the 30-year bond. Now, what this is good for the banks. And you probably see JP Morgan catch a bid on here, right?
Yes,
Did we?
You see all the banks.
Yep. Let's take a quick look. This is good. Potentially higher interest rates. That's good for the banks. Let's go to, I want to see the pre-market chart here to get 24-hour. Boom. Come on now. Yep. Banks caught a little bit of a bid. We'll take a look at them, and then we'll look at them in relation to the price action from yesterday, because you did have a little sell-off in the banks heading into the report. Let's see here. Trading at 164.15. I look at my 15-minute chart, then I'm going to go to my dailies here. And what do we have on our dailies? Yesterday's high, 164.22. That's where we are right now. Next day's high, quite a bit above that at 65.76. So, moment of truth here for JP Morgan. After that, your 2-day close, it gets at 165. And then, I don't know, man, this 165, you did have 3 lows in that area. It's kind of the area that you broke out from. So there's your potential resistance. Buy the dippers, reign supreme again. The S&Ps are now green on the session by $1.50.
Wow.
They bought the dip. That was just well, we'll see. Dancing around unchanged. I think, Mark said about not trying to, buy the dip today. Let's see what happens. If we stay unchanged here and this market just shrugged this off, next thing I want to see is take out the pre-market high and then tackle all those tops that we mentioned. Let's just call it 42, 35, 36. But we managed to go green, buy the dip. Not much react. Bitcoin, that was up before.
Mm-hmm.
That was up $1,500. I don't think Bitcoin moved.
I don't know if you saw the headline this morning, but there is a firm that is allowing people to add Bitcoin to their 401ks. That's going to start happening now.
In El Salvador?
No. Although maybe there too. Here's a stat from Northman Trader on Twitter, as you can follow. Core CPI, which core CPI is just CPI, but without food and energy factored in, up 3.8%. That was the highest year-over-year increase since 1992. That's almost my entire life.
Wait, you were born in 91, right?
Yeah, that's what I said. Almost my entire life.
Because Dana was born in 92. But we'll see. I mean, the battle of unchanged goes here. Thank you, Marco. He says, I'm funny. I resemble that remark. A lot of people think I'm funny looking too. All right. Yeah, anyway. This has been a fun show, man. Some entertainment here. Should we talk? Oh, I don't want to say entertainment because then people are going to talk about AMC. But we got to do an AMC, right? Just one? Just for the hell of it?
Well, let's just do it this way. There's a bunch of stocks. AMC, I don't want to say they're not relevant because AMC is very relevant, but it's almost like on the afterburner for the moment because there's about a dozen of these things that are moving. Like, forget AMC, forget GameStop. You got names like Wish, you got Clove, you got CLNE, right? Cleveland Cliffs for some reason. Here's my take on this. There is no way that this is retail driven. It can't be. There's too much volume. If you look at just Clover, Context Logic, Clean Energy, which is CLNE, and AMC, we're talking hundreds of millions of shares yesterday alone, right? In those four names, there was just no way that this is retail.
Well,
I'm sorry.
Of course, yeah, it's sorry. Yeah, it's algos too. I mean, we've talked about this. Yeah, I mean the needle's moving, and they're not gonna ignore this kind of price action for the order flow. Boom. No.
But what I'm also saying is like I have doubts. Like all these stocks are getting posted like on Reddit, right? On Wall Street Bets and on Twitter and whatever. I have doubts that those posts are organic.
Of course. I mean, come on. You think a hedge fund's going to, not dip their toe into this and, be on, and it's all anonymous too, right? On Reddit, you can do what the hell you want.
You can do what
you can do what you want, when you want, how you want. I'm sure there's multiple people in there doing it. Just real quick, Clover traded down 82 cents. I don't know about this one, but if you're looking for a level, you did take out that 2-day low at 1632. So this needs to get back above 1632. You got a gap at where did it close at? It closed at near the low of the day, 1692. So got to get green. If this thing doesn't get green and it rolls over, then why not have a gap fill hill, right? Gaps are meant to be filled. Where do you go? Where do you go for support in this thing if you keep going lower? I mean, maybe you can find a Fibonacci, a retracement number, or I'm sure you can cock some kind of number in between there. But a lot of people, maybe if it does swoop down there the first time, maybe have a bit, if you want to buy it, 1210, 1220. Just to make sure that you get it. If it, hit, boom, go to 1190. And then you're like, oh, it's going lower. And all of a sudden it's 1210 bid in your face, 20, 30, 40, 50. So that's what I'm looking at. And I'm sure a lot of people would like to see the mark. You're right. AMC's just been quiet the last couple of days at 60 level. sellers are now going to come down. We identified 60. We identified the old-time closing high at 62.55. Sellers came down to 60. Now you're traded down to $1.94. What's this low here? Well, you got a level to look at, and it did get through there in the after hours, and it did get through there early this morning. So here's a good number for you. Maybe a good number. SPOO's positive by 9 points right now. Buy the dip, baby. Look at that. Now we're up 8 points. Holy Toledo.
Should I mention?
Go ahead.
Should I mention jobless claims? Do we care about that? Sure, why not? Jobless claims,
anything.
Jobless claims came in higher than expected, which is not a good sign. 376,000 jobless claims filed last week versus 370,000 estimate. Still down week over week, but higher. And whatever.
I hope Triple D hasn't is not looking at his phone right now, because he'd be like, oh my God, look at all this action, look at all this volatility. That's what he likes. There's some nice volatility here.
Yeah, but the banks are still going. JP Morgan.
Are they still going? Yeah, 64.30. Yeah, it took out yesterday's high. Let's do a little check under the hood for the banks. Bank America, that's trading up. That didn't pull back from the high as much. Look at we're traded 42.65. Look how closely correlated these things are. Yesterday's high too, 42.73. The close from that was a high from yesterday. The close the previous day, 42.88. So both that's like your pair traders and your arb traders keeping it in line there. Let's look at Wells Fargo. Anyone wants to talk about Wells Fargo, that's trading up. Now that one, same thing. Well, you're not even, you're right at yesterday's high in this, 46.34. A lot of confluence here with the banks. Let's see if they can continue this move.
Joel, what about oil here? Do I see 70.62 on the futures? Do I see it?
I see my front month, and this is the thing, which is really tough if you're trading the crude oil futures, is they roll every single month, right? So if you're doing your levels and stuff, it's the contango. Well, the contango was a long time ago, but just think about that. From negative 45, was it negative 40 to 70?
Something like that.
What a move! If you look at crude, Mark, the trend is your friend in crude. Let's see here. One number I'll give. Yeah, crude got a little bit of a pop off that. High the move, 70.62. That's what I'm seeing. Basis the what contract are they using now? They are using the July contract already. Yep, they moved to the July. The high closing. This is kind of interesting. We poked our head above. We hit 70 one day. We made 3 daily highs over 70, but our best close we could do was 70.05. Let's see how that happens, how we end up in today's session. SPOOs go up to 27.50. My printer wasn't working this morning, so in the triple close area. Spencer, can you come over and help fix my printer?
I'm laughing at the chat right now.
Why? What are they saying?
Someone's bribing us, and it might work. Well, they're bribing you, and it might work. But we'll wait for ticker time for that. So,
a new swimming cap.
Yeah.
I only wear a cap when I race.
Oh, okay.
And you know what kind of cap I wear? You get one guess.
Michigan, duh.
What kind of Michigan cap?
You can't. I already answered it. You can't.
Now with an M on it, you think?
Sure.
No, it's the football helmet.
Oh, excuse me.
Yeah.
Oh,
yeah.
I see.
Do you want me to go get it? I can go get it.
No, don't do that.
I can find it.
Wait, there's a few other things I wanted to say because we got a lot going on right now. There's a lot in chat that we'll get to in a couple minutes.
Are they picking on us?
No,
Are they picking on Dennis and he's not even here?
No.
Oh my gosh.
Although Alt Styles wants to know what a printer is. That's what they have that at the Fed, Alt Styles, and it's where all the money comes from. We have another one of these companies announcing in a press release that they're joining the Russell. So pull up your VLDR from yesterday, okay? Because we talked about this, right? The news was out Friday. It popped because they came out with a press release saying they're joining the Russell 3000 or what?
Right.
And so it popped, and then it gave it back, right? So
Spencer, you love these PR stories. You always when these companies pull these
It's just-
these tricks.
It's just stupid. So anyway, Microvision, MVIS, just had a press release out this morning saying the exact same thing. Hey guys, look at us. We're joining the Russell 3000. Whoopty freaking do. So anyway, again, not new news. News that was out on Friday. Stock is up $1, almost $2 here in the pre-market. Look at VLDR. Use it as your guide. I'm not saying Microvision has to give it back.
Yeah.
But we have precedent for this. It was yesterday. So there.
This is how opportunistic Dennis is. When we talked about this on the pre-market show, right? Was it yesterday? And he was like, "Well, there's too many stocks to buy," because he was waiting to buy all the And then the also thing he talked about was sometime it flips, right? Like something's going to be added. It's not decided until the last second. But this Microvision, this one is this was a low floater too, right? So the news, they got it going. The old press release trick, knocking up against 23. Not seeing much here. Let's see. Yeah, you were up here not too long ago. What do you got for me, folks? 23.26, 23.46. That's a potential target. And then you get into that big candle up closer to 26, but pair highs, let's call it 23.36. S&Ps get up to 27. I have a feeling this is going to be one choppy day, man. Look at already, we've got a 20-point range, but if you take the ups and downs and all the rounds, you probably trade 60, 70 handles. Michael Phelps is not a Michigan grad, for your information.
Oh, he never graduated? I thought
he just came there. He took a call. He came to swim there because of Bob Bowman.
Yeah.
Yeah.
Okay.
And you know what? I got to tell you something. I looked at a Michael Phelps pool yesterday.
I don't know what that means.
Like a swim spa pool.
I still don't know what that. Wait, what?
Okay. Like how you have a pool that you put in the ground?
Yeah.
Well, Michael Phelps has a company where.
He does?
Yeah. Yeah, like you don't have to build a pool. They just come and build it, and they just drop it in your backyard.
Oh.
It's a little bit more complicated than that, but
right.
Yeah. I don't know. It's so funny that all the swimming stuff is coming up, and I looked at that yesterday. But
hey, speaking of swimming, how's our buddy Pool doing? POOL. Hey,
oh man,
not bad, right?
I thought about. Do you know? I also put an order in, or no, I put a request in through this place to get an estimate, and the guy emailed me and said they're low on staff. He's not usually in sales, and he can get back to me in 6 months. That's what he said to me. Can you believe that?
All right. Well, anyway, Leslie's had itself a not great day yesterday, but it's still
Pool's bunching up here at 440. Tight ranges here after the gap up. I would just keep. I don't know who trades this stock. I don't know. 440. I call 430 to 441. Yeah. That's a trading range for 3 days. And if you want to talk about a move out of a trading range, both Mitch and I are kicking ourselves. Look at Macy's. 14 days. 14 days.
When was the last time we talked Macy's on this show? It's been months. I don't know if we talked about Macy's since last year.
I'm sure we did on earnings.
Maybe.
Probably even know that. And you know what? This is how some smart people are. This was the day. You see this big candle here?
Mm-hmm.
That was the day before earnings. The day before earnings, the thing moved $2. All right. And I think it maybe got a positive mention on CNBC. I don't want to give you too much credit, but this is the earnings, pre-earnings day. Earnings were the 17th. This is the 14th. This is what did on the 17th. It made the high, and then it was just ping pong. 18, 19, 18, 19, 18, 19, 18, 19. Boom. Blew through it yesterday. Took out this high here, which was 1965. It was off to the races. Pulled back 1960. I mean, you got to start thinking about the high and the move here in Macy's. That's 2110. And then you got to go back a long ways in Macy's here. You got to go back to, I believe, what was this monthly high here? 2390. No, I saw another one that was a little bit lower. 2285. Back in August of 2019, you had a 2285, but I just wanted to show that technical 14 days in a row. I think I stopped looking at it after 7 days. I hope some people caught that one. Let's see if we get a continuation move today.
All right, we got about 10 minutes before Peter talks me, so let's do some ticker time.
Sure.
Oh, before we do that, GWS says he could have gone all day without the picture of Joel in a Speedo and a swim cap in his head, but you're welcome.
No, you know what? I wear those. Not the Speedos. I wear the longer trunks. People don't wear those anymore.
The ones that go like halfway down your knee, right? Or like
yeah. And I used to have one of those cheater suits. You know?
Oh, the ones that they like banned?
They banned. You were just like, you dove in the water and you were just like, you floated on top of the water. Yeah. I call them cheater suits. They're fast, man. Made me a lot faster for the old man.
All right, it's ticker time. Drop some tickers in the chat and we'll take a look. What was the one that got us started on the pool thing in the first place? It was some MLP that I don't remember.
You want to hear a Mark Spitz story? You want to hear 2 Mark Spitz stories?
All right, let's save one for another day. We'll do one now and then we'll save one.
Before the 72 Olympics, my dad took me to a Michigan, Indiana swim meet. He swam in Indiana.
Okay.
I was just a little pup. And, it was no big deal. It was for the Olympics. So, like, I walked out on the deck and I started talking to Mark Spitz and stuff. And he was like, it was like that Joe Green commercial. Before his race, he threw his towel and said, "Hey, hold on to this for me." And then he got in the pool and smoked everybody. That's
Mark Spitz.
That's yeah. It's just like that Joe Green commercial, I know. A coconut smile. Yeah, that was 70 or 71.
All right. Let's get to Corey.
You don't like that story? All right, I'll say
it was good. I just wanted to get to the ticker. So Corey got us on the swim thing in the first place with ENLC, which is I think an MLP. Am I right? ENLC. And Link Midstream. So yeah, it is an MLP.
Oh, so you're sticking with the pool theme here, huh?
Well, he's the one that got us on this tangent in the first place. So, and he bribed you. He said if you cover it, he'll give you a swim cap. Not that you need it, apparently. But
cover it. Why did it go up, Spencer? Could you look why it went up this one day?
I would
short squeeze.
I would
tell me why.
No. There was actually some fundamental information. They raised their EBITDA guidance for the year, and they raised their net income guidance as well.
Well, no one had a clue here in these 2 days, right? No one knew anything. Then you had the news, a little pullback. I mean, easy technical analysis says, get rid of that seller just in the lower 16 handle. They're probably even targeting $6, right? 616, 616, 609, 612. Yesterday's high 597. So you're getting bid up here. So you got less distance to travel. I think what I'd like to see for this one, for sure, holding 577. We're trading 5. This thing doesn't move a ton. You did take out the lows at 595, but hold 577. And then you want to see it just kind of bunch up here a couple days, right? Consolidate. Buy, sell, and then boom, make up. Get that close over 6, over that 616, another leg up. Man, you also got congestion here in the monthlies too. You just got a ton of stuff. Next target after that, you go back to January pre-pandemic. 648 could be a new product, new target for ENLC. First time ever covered on pre-market prep.
All right, Donkey Limit wants to know what your 50 free time is. I don't know if you want to give that information away.
My fastest time ever, or what I could go right now?
Probably we can go right now.
That's a good question. If I got hot right now at 57 years old, I could probably go a 24.9 for 50 yards.
That's good for a man your age.
Yep. And I was never really a sprinter. I think the fastest I ever went in high school was maybe like a high 22 or something like that. I wasn't a sprinter. I was more of a distance. I was a little guy. I was more of a 200 and 500 guy. But anyways, let's go. No more swimming talk.
No more. This has been more swimming talk on today's show than any other show we've ever had. I think.
I'm going to get some heat on Twitter for today.
Okay. The Postman's asking about RH. We talked about it briefly.
Oh,
Mark,
man.
The consumer is strong, and they're also raising their guidance. It was a great report. Everyone is buying expensive furniture apparently, and RH is up this morning.
I should have bought it yesterday. Is my investment advice. With this one, I mean, always want to look through, pre-market high. Right now it's trading at the high of the session, 669.70. What do you got? You got, what's this high? I just go your daily highs. I'd give a target. One target would be 674.09. So we'll call that 674. Got a little gap to fill up to 680. These are just intermediate numbers. And then if it really got rocking and rolling to the upside, the first time it got over 700, 707, I would be, I'd probably be tempted to let a little bit. That would be up nearly $100 on the session. 0670, 0732. If this thing goes into reverse, like if you're just, you're shorting it, and I think that what you just have, I mean, seeing the top of yesterday's range could be really tough. 632, 67, that would be a gap fill. If you are brave enough to short this thing, and let's say you get a 680 short off, it starts to pull back, I think you just have to go like 670 bid, 665 bid, 660 bid, layer it down with the bigger size, at your lower level, so you get filled. But,
what about Chewy here? They report tonight, and the consumer is strong, and everyone's has.
Yeah, but aren't they going to the pet store to buy the stuff now? So they get it either way. Right? Well, so no, they're delivery though. They don't have any physical stores, right?
Right. It's all online.
I don't know. I don't know. You know what would make me hesitant about that chart would be this: UPS and FedEx. So it's had a nice move. This could be one of those, and be careful if you're trading this one off the headline. This could be one of the tricks where they give a good quarter, but they don't give good guidance. So I would be careful on this one. I mean, I have no way of, who knows what's going to happen. You're bouncing up above 80. You backed off 80 a couple days ago. If you're looking for an immediate level, let's call $82. I see three highs between 81.43 and 82 for some targets. So be careful on that one. It could be the good news and then the bad news.
I'm sorry, guys. There's so many tickers flying. I can't get.
I can do the other tickers on pre-market prep after this, folks. If you want to do that, you can join me. I'm there a few minutes after 9. S&P's up 8 handles, 26.5.
Premarketprep.com is where you can find it, Joel.
That's correct.
After this show. All right, let me just get a couple here. What about I'm scrolling. We didn't talk fuel cell, and they reported.
Oh, they're getting hit, huh?
Yeah. Well, last I checked, I haven't checked in about an hour. Let's see. Yeah. Okay.
Okay.
Whoa. Okay.
Let's see. What do we got?
Anyway, their earnings were whatever. They missed by a penny, and sales were light.
Look, Spencer, look at my chart on my left, the 15-minute chart.
Okay.
Look at the chart on the right.
We're looking at the
daily.
Okay. I'm here.
What are you seeing here? What are you thinking?
9. What is that on the left? Was it 980 something?
Yeah, 980's holding, right? Yeah. I mean, there's someone bidding there. Someone wants to own it. I don't know if they're going to get taken out, if they're going to want to buy 972 and 960, 950, 940. All those old lows at 10, all these lows. So they're saying, hey, I don't want to buy it at 10 anymore. I want to buy it at 980. So we'll see what happens. Holds this 980, gets over 10. You got a chance to rally. If not, if they just get overwhelmed with sellers and you start to crater and you want to reload here, what do we go from 642, 6-point move 3, 9.5 is halfway back of this move and feel like the reload. But that's what I'm looking at in fuel cell.
It's 8:59. Joel, we got a minute before I'm going to bring on Peter Tuchman. Do you have any final? The S&Ps are still going.
Yeah.
Wow. Still going. Any final thoughts for us? How are the banks doing? Banks still going. Everything is still going here. Oil, oil not for the moment. But
inflation is inflated stock prices too, folks. Buy the dip. And now we're going to have to deal with that number. I hope I don't buy the high of the day again. Man, I hate that. Anyways, we'll take a look. We know where resistance is, and we're moving up toward. So we will see you all later on. Thanks, Spencer. That was fun.
See, we don't.
I know. It was so nice. I got to talk.
I know.
All right. See you later.
Hard to get a running with him. All right. Great call, Vegas. I did want to mention that Path as well, because I saw that Kathy bought Path in like 3 different ETFs yesterday, and she's been buying it a lot. So we don't talk about the ARK Invest daily buys and sales, but I did see her buying a lot of Path, selling a lot of, what was it, DocuSign, and there's one more. Buying Path. She's still buying Coinbase, and she sold a lot of DocuSign last night. That's what it was. That's what the ARK Invest moves of yesterday. If you still care about that stuff. Let me bring on Peter Tuchman here for actually, you know what? Here, because he's bugging me in chat. Mitch, I'm gonna give you the floor. You have 30 seconds. What do you want, man? You keep bugging me. What's going on? Oh, sorry.
What's up? What's up, guys? Just really want to tell you guys that I just came out with a new podcast called The Money Mitch Watch List. It's going to be coming out every single morning. It's less than 5 minutes. So, hey, quick morning. You'll get some of the stocks that I'm going to be watching, some of the ways that I'll be looking at. So definitely check it out, guys. Just put the link up. You can find it in any kind of your podcast distribution, Spotify, iTunes. Check it out, guys.
All right. You had the floor. Thank you. Peter Tuchman, the Einstein of Wall Street. The man himself, Wall Street Global Trading Academy, not joining us on the floor today, but that's okay. Peter, good morning.
Good morning, guys. Joining you on vacation.
Oh, where are we at?
Nantucket.
Nantucket. All right. Very nice. Hope you're enjoying yourself.
Thank you.
So you're away from the floor. You're away from the exchange. Does that mean you're away from the markets? How do you do that when you're on vacation?
You know what? I don't really take much vacation. I would say maybe a week a year is about my limit. And while I'm off, I'm surely connected to it. My business is still running and watching stocks. I'm obviously doing stuff with Wall Street Global. We did a Facebook group live lunch and learn yesterday with David, as I always do, is watching David on Benzinga yesterday morning, as I did Monday through Wednesday. So, you know, while the market never sleeps, neither do I. It's really my motivator on a daily basis. So it's exciting. And you can't really, in my opinion, after all these years, especially my new line is, this is not your grandfather's stock market, right? If you step away from this market for a moment, you're really the pieces of the puzzle will start dropping off because so much is happening, right? The generational moves, the generational, impetus in why markets are doing what they're doing, all this new info with who's buying what. And I was fascinated by, everybody's got a call on about what they're watching. And I love that. And I love that about Benzinga. Without opinion, there's a lot of information out there. But my fear is that everybody sort of is watching what Kathy's doing. When, it's like you used to respond when we were on the floor, when you'd hear what Buffett was buying and selling or one of the bigger guys was doing. Once you hear about it, that's old news. And my fear is that if people start reacting to it because they hear it, not on your show, but in general, on the internet, or as you read it in the newspaper, that's old news.
Right. I mean, it's not quite the same, at least with regards to Kathy Wood, because these are daily rebalances and daily trades. But yes, I understand the point of what you're saying. And actually, I would say the same thing applies not just to the conventional Wall Street influencers, be it a Kathy or a Buffett or whomever, but people on social media, you don't really, we are in the age of the social media market influencer, right? And you don't know how many of them are really super transparent. I don't know. And if you're following someone, chances are they're probably going to tell you, get yourself in and get yourself out. Don't just follow me. And if they're telling you to follow them, then maybe don't do that. But you got to get yourself, if you got yourself in, only you can get yourself out. Unfortunately,
Dave, my partner David Green always talks about it. What risk and money management is about. Everybody can get a trade. It's a way you get out of a trade, and whether you make money or lose money on the trade, actually the exit of the strategy, your strategy on exit is really an important thing. But I'll say one thing, look, obviously we're in the generation and the time, especially the last couple of weeks, as we did see in January, of this whole meme phenomenon. Right. And I'm pretty vocal on social media. And the other day, I watched and I'm on the floor except for this week. And I watched, obviously, AMC do what it was doing. And I saw it go from 40 to, 62 and then 77 in aftermarket, and I had decided to, I never take myself too seriously. So I had a little fun because after the close of the market that day, I did an IG live and everyone was going, AMC to the moon. It's going to 500, hold the line, and all that sort of banter narrative stuff. And I just said, guys, if you're in, I also found out that day, 92% of the volume in AMC was above $50, right? It closed at 62. So as somebody who who loves to follow day trading and teach technical analysis, I like people to take profits to preserve their capital and their portfolio so that they can live to see another day tomorrow to trade. And so I said to everybody, you know what? I hope everyone's taking a little bit of a profit here. We don't know what will happen. Of course, that night, they decided to do the secondary. The next day it opened at 45. It went down to 40. So I put a little nursery rhyme. And I said, and it was so like little Miss Muffet sat on a tuffet buying some AMC. Along came a spider and sat down beside her and said, if you bought it at 50 and didn't sell it at 77, you're a dumbass. and it was a fun little nursery rhyme. And I got so much crap for it because you're just an old man. What do you know about it? You obviously have your agenda and all this. And of course, the next day it did open down. And we hear about those few guys who made $1 million. We're not hearing about these guys who got blown up, right? I put out a bunch of nursery rhymes. And I had a lot of fun with it because there's nothing I find more exciting that even, especially if it's this meme thing, that gets people interested in the stock market. You love thing too, guys, right? Yeah. Whatever gets people into it is the greatest gift in the world. I just would hate to see somebody come to this party, get blown up and leave,
right. I totally agree with you. I may steal that nursery rhyme. I love people getting into stocks and getting into investing. What gives me pause sometimes is when they're all trying to get rich quick. When that's probably not going to happen for most of us. And that's okay. There's nothing wrong with that. There's nothing wrong with getting rich slowly. It's much easier to get rich slowly, frankly, than it is to get rich quickly. It just requires, delayed gratification, some more patience. But I love the interest. I love people wanting to learn. I don't like when they ask, ask me about the next hot penny stock because, I don't know, and nor do I care.
Nor do you care.
Right. But yeah, I completely agree with you. That's the one thing that I've never understood about this whole, craze is because if it were me, I couldn't help but take a profit. And that's just my own, I guess if you're long and strong and you've got diamond hands, then great for you. You've got, you've got more guts than I do, I guess. But I mean, why not? My take is why not take some money off the table? Why not actually book a profit? I don't know. People don't want to do that, and that's fine. It's their money. Do whatever they want. But
it's funny though. I'll sorry to interrupt you, but it's funny.
Yeah.
Downtown Josh Brown said the other day that he's finding people are posting large losses in meme stocks to get likes.
Oh,
right. Rather than take profits. And that's not about guts. It's about discipline and consistency. This is some people who are telling you to hold the line can afford we saw that with Roaring Kitty early on, who had made millions of dollars in something. And one day he was up 25 mil. The next day he was only up 15 mil.
Yeah.
Right. He still had a lot of money in his account, but he was down $10 million. Most people out there who are following this craze and this phenomenon don't have a risk reward ratio of $10 million. Right. And so I would hate to see, we don't hear about those guys who got blown up, who leveraged themselves, who mortgaged their grandmother's houses and bought AMC.
Right. To your point about it's called a loss porn, and that was the original. I've been I've been a subscriber on Wall Street Bets for years, like 5 years, 6 years, and that was the original point of Wall Street Bets. Why before it hit the mainstream, it was look at how stupid I am. Look at this dumb trade I made. Look at these dumb options I bought or sold, and look at all the money I lost. And that's all it was. It was just people making fun of each other and making fun of themselves. And then it blew up and it became this whole thing. And they realized if they work together with one voice, they can actually move the market in a stock. But originally, and I think it's trying to get back to that, is people at its core, it's just people posting loss porn. Look at the screenshot of my Robinhood account and look how far down I am. And look at this crazy out of the money call option I just bought that expires in 1 hour. Right? I mean, like, that's what it is at its core.
Is it kind of like Jackass for stock market? I mean,
perhaps.
Watch me jump off a cliff and break my head open, and everybody can laugh. And I bet I made a little money on the slide.
Maybe. Okay. Before we let you go, let's get your overall market thoughts here. We just had a hot CPI number. SPY stopped going down, stopped going up, I should say, finally in the morning here. But CPI came in greater than expected. The banks were moving. The market was moving. What is your overall take here on how today could shake out?
So you know what? I was reading Arthur Cashin is one of my mentors. He's the head of UBS. He's been on the floor forever. He's sort of the grandfather of NYSE lore, right? And this morning he said, you know, it's funny how things we're watching the yield go down. Market should be bullish. Yesterday that didn't happen. What's going on in Europe is starting to affect us a little bit. Market doesn't seem to want to break. And what he did say was sometimes when you find the key to the market, they change the locks, right? It's an old adage, you know, and I had not heard it before, but it's kind of fascinating here. I don't think this is not your grandfather's stock market. The rules of the game are changing, right? And so whether, you know, and I always am a firm believer, and people always laugh at me when I'm on the floor and the market's doing these wild moves. I always say the market's doing what it wants to do. My interpretation economically or forensically of what the market and why it's doing what it's doing, I've got to be a student every day now, a day at a time, because it does things that are counterintuitive, right? That we're seeing people get out of one hole. It's like, you know, that scene in the movie Airplane when the plane is landing and they have no brakes, and there's going to be landing at gate 6, and then they're going at gate 5 and gate 4 because they don't have the brakes to shut the thing down. It seems like the rules are changing. The seats are changing on the Titanic in that sort of a way. So the market seems to tell me that it's irrespective of any little bits of bad news that may come out, it still seems to be forging higher. I love this, you know, Restoration Hardware earnings yesterday. There are going to be sectors that are going to benefit from this reopening. They're going to be huge. A lot of them have a lot of power behind the market. Right now, we seem to be in this focus on the meme thing. And it's funny that people are so ADD on this thing that, you know, are they selling their crypto and buying memes? I don't know, but they seem to be trading inversely. Net inflation is going to be where it is. We're going to learn more about that story. The yield is sort of telling us things too, yet the market continues to go higher. I think the reopening story, people sort of coming online again, meaning they're crawling out of their houses, maybe going back to work. You know, their life is starting to open up again, although there's some hesitation around the world with the virus. I think is the wind behind the sale in the market in general. Nothing seems to break this market. We've seen short-term breaks. We saw that NASDAQ a few weeks ago. That was short-lived. The inflation number, which made the market, you know, that inflation chatter made the market sort of tumble for a little bit, but they're short-lived. Net, this market seems like it's forging higher. I'm baffled.
You don't have to understand it, but I like where your head's at. I like where your head's at. You're bullish.
Yeah,
I like it.
Yeah, I mean, I think it's absolutely the appetite for the market. And as I said to you, there's nothing more exciting for me than this new generation of people in the market whose attention is now on whatever gets them here. Whatever gets them here is wonderful, right? It's a matter of when they get here that they follow the rules and they get good habits, right? Because I just hate people coming here, you know, blowing up and walking away with their tail between their legs.
Right. Good habits. Good habits is a big thing. And I think a lot of what would be terrible is if you saw a repeat of the .com bubble where a lot of people got blown up and then thought, okay, this is rigged. I'm done. Forget this game. I'm done. And then you missed out on what I think is a great wealth building opportunity. So you are bullish here. You don't see a path lower. You see a path higher. Are there any specific sectors, industries you like? And let's say short term, the next days and weeks here, or even just like through the summer. Anything you like?
You know, I found it fascinating that with Restoration Hardware, you know, it was amazing. You know, when the pandemic hit, there was obviously a group of stocks that we're able to, and I hate to say benefit from the pandemic, but basically make our lives a lot easier, and we're rallying in it. Whether
Yep.
it was DocuSigns or the Zooms, whether it was the housewares, the restoration hardwares or whatnot, the Pelotons of the day. So, and I think we're going to see a little bit of a rotation as the world starts to reopen out of some of those and into the more, into more of a recovery story. And I was fascinated how strong, up 84% in revenue last year in restoration hardware. I think that sector is incredible. I think people, I'm sort of fascinated in what the world's going to start to look like on the other side of this, and what the market's going to look like on the other side of this. We're seeing a change on a day-to-day basis, right? The days that were all about the meme thing, other things tended to suffer. Some of them actually, consolidated a little bit. So it's hard for me to know really what is the reopening story. I think the reopening story in the cruise lines and the airlines and whatnot is going to be a little longer before that really participates in it. But I think people rebuilding their homes, I think, is a fascinating sector.
Peter Tuchman is AKA the Einstein of Wall Street. You can find his course. I'll put the link up. It's in the description, I should say. If you just scroll down in the description of this video, the link is there. Wall Street Global Trading Academy.com. There it is. Peter Tuchman. Sir, always a pleasure. We'll talk to you again next week, hopefully, I guess, from the floor.
Yes, you will. I will be there next week. I'll send you
All right. Have a good one, Peter. All right. Always a pleasure to talk to him. If that guy looks familiar, it's because you've seen his picture before in news articles. The guy is like the most photographed man on Wall Street. Got a couple minutes before we're going to get to our next stream here. No David Green today. We've got Robert Roy. We're going to start this. Robert Roy has been doing a weekly options show for us every Friday at 2 o'clock, and we've moved it from Friday afternoons to Thursday mornings. So every Thursday at 9:25 for an hour, Robert Roy is going to walk through some option setups for the day, walk through the open, maybe do a little bit trading, doing a lot of teaching. Different perspective than David Green. David Green is like a short-term stock guy, making trades for a couple of minutes or a couple hours on stocks. Robert Roy mostly deals with options, stock options, and index options. And that'll be every Thursday starting today. It'll start around 9:25 or so and go for an hour. Actually, after Robert Roy today, we have a special show. Today and today alone, we may cut Robert a little bit early because we're doing something very unique here, at least for us. First time. All right. It may go great. It may go horribly wrong. You have to tune in to find out. But at 10, remote broadcast. We are broadcasting, streaming live from somewhere that's not someone's house or the Benzinga office, right? Jason Raznick and crew are going to Sandy Munro and Associates. If the name sounds vaguely familiar, if you don't know it at all, Sandy Munro is this legendary auto engineer. He worked for Ford back in the day, worked for GM back in the day, and I think went viral in certain circles a few years ago because he bought a Tesla and basically just like disassembled the car in his garage and they took it apart and like analyzed it from like an engineering standpoint. Was a Tesla bear for a long time. Had a meeting with he had an interview. Elon Musk actually came to Sandy Munro. That's how you know he's a big deal. When Elon Musk comes to you, you're a big deal. And Elon Musk came to him and they did an interview on his channel. This was last year, I think. And Sandy Munro has turned around on Tesla after years of hating the cars. He's turned around, and this guy probably knows more about cars than like 99% of people out there. Knows more about the make of the Tesla, the actual car itself. Forget all the other stuff. Forget the tweets and the memes and all that. Nothing to do with that. He's all about the car. Okay, so Jason Raznick is going to be talking to Sandy Munro at 10:15 Eastern time today, and that's going to go for about 45 minutes. That's on the Raz Report, which is like the special show we do when Jason Raznick gets high-profile guests. So we are very excited for that interview with Sandy Munro after Robert Roy today. We've got SPACs Attack as usual at 11 o'clock Eastern time. They got another good one today. They're talking to the founder of Butterfly. Right, BFLY. Did I get the ticker right? I think I did. Butterfly Networks. It's BFLY. Did I make that up? Yeah, BFLY. That's on at 11 o'clock Eastern time. Tune in to SPAC's Attack for that. We've got the Power Hour as usual after that at noon. Get Technical is back. Neil Hamilton was out for a couple of days. He's back today. He'll be on at 1 o'clock. We got our crypto show at 2. Biotech Buzz at 2:30. Vivi's back as well. The At the Close show. Someone was saying that they can't find the At the Close show. The At the Close show is there every day at 3:30. Joel and I hang out for a half hour into the close. So it's right here on our YouTube channel. You shouldn't have to look too hard to find it. If you go to the video tab, if you go to past streams, you'll be able to see our At the Close show every day at 3:30. Cannabis Hour at 4 o'clock today. After Hours with Ryan Rosbiani at 5. Money Mitch at 6. And Chance Trades at 6:30. Wrapping up the day on Benzinga. There was a couple other things I wanted to get to before I wrap it up and go to Robert. I wanted to mention Cheesecake Factory. Let's bring up the chart and the news feed here, Benzinga Pro, because they had a news of an offering. They said this morning, they said they filed for a mixed shelf offering. They're going to raise $300 million via convertible senior notes and $175 million of common stock. So there you see the chart on the right. That's a 5-day chart. So the stock is down. You can see this morning a couple of bucks. This is one company that remember they couldn't pay their rent at the start of the pandemic, and they made it. But here they are raising more money. So the stock's had a pretty nice run. You can see on the 1-year chart since last summer. Pretty nice run for Cake. So they're raising money when they can. Some dilution in the short term, but that's what you got to do sometimes. Let me catch up on chat. Yes, exactly right, Patrick. Sandy Monroe tears down cars and then consults with manufacturers on how to improve them. That's exactly right. So, again, super hyped for that. This guy is like literally a car genius. So that'll be at 10 to 15. After Robert Roy, which is starting in a couple of minutes here. And the stream will redirect again. You shouldn't have to do anything. Just stay and the next video will start, or if your autoplay is turned off, just hit the play button. But the stream will start. This stream will end. That stream will start, and it'll be pretty much good to go. What else? Catching up on chat. Alt Styles, thank you very much, man. He says, I am the anchor. I appreciate that. If I'm the anchor, are you saying I'm dragging us down? Saying I'm dragging us down as the anchor. Just keeping an eye on markets here. Let's bring up my movers tool in Benzinga Pro. See what's up, what's down. MDLY is on top of my movers tool this morning. Do they have news or something? I don't know. Billion shares have traded. Jeez Louise. Don't see any headlines on MDLY. That's my top mover. I'm 92% in the pre-market session. Top loser is Oxygen. I think it's there like every other day. Okay. What's the news here on Oxygen? OCGN. They will pursue a BL. So basically, a different regulatory pathway is what they're doing. There's more than one regulatory path to get a drug approved, and they're pursuing a different path to get their vaccine candidate out the door. Market does not like that, though, so stock is down 27% here. Fuel Cell we talked about. That's a big loser as well. Cheesecake. Geo Group. Oh, my God, guys. This was insane. This Geo Group hop yesterday. This is part of what, made me – not part of, but, this kind of move is sketchy. Like, how many retail traders – are pumping up a publicly traded prison company, right? I don't know. It's just so random. Doesn't make any sense. So that's where my head's at. That these are not retail-driven moves. There's somebody else. Hedge funds are known to, play tricks, do things that others might perceive as dirty, and that's probably what's going on here. Is my take. They're probably quick to capture on this trend. Okay, it is 9:24. Robert Roy is going to start in a couple of minutes, if not 1 minute. So I'm going to hop off the stream. Everyone, as always, please remember that all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Please, if you haven't already, take a split second out of your day. Drop us a like. How many likes are we at here this morning? Are we at 500? That's usually my goal. Whoops. We're at 364. Let's get to 500, guys. Come on. It's Thursday, but it feels like a Friday to me. Drop us a like if you can. Again, pro.benzinga.com, free 2-week trial. Check it out as always. And I'm going to hop off here. Robert Roy from Wealth Builders HQ is going to hop on now and do some trading into the open. Everyone have a good start to your day, and I'll see you a little bit later.